You guys can see it's recording. All right, cool. So as normal, we're going to start about, probably in like 5 minutes after everyone kind of sweeps in from being fashionably late. So today, I just did the first 10 webinars, and I think that's kind of maybe like my introduction chapters, I guess. This is going to be the 11th webinar I do, and so I kind of want to open it up for a little bit more like fun stuff. So like starting from these webinars, like going forward, like I'm going to try to have like a guest speaker almost every time. And it doesn't have to be a moderator. Like I asked James to do it and MC to do it, but they're both busy this week. James is going to do it next week. But I do want to open the floor a little bit. If anyone wants to like hop in and join a little bit, like you guys can hop in, and maybe right before the Q&A, we can do somewhat interview, not really, just if you want to hop on and like talk about like what was good for you this week, what was bad, like just talk about trading stuff, maybe talk about the webinar that I just did, right? Or like maybe go over a trade or something, just invite someone over. No, I'll just invite you on. I'll allow you guys to speak. So I guess you will have a mic. I'll just allow you guys to participate and use your mic. So if one of you guys want to do that, just let me know. Like after the webinar, I'll kind of open the floor again, see if anyone wants to hop on and maybe talk, or not. It's cool. And you don't have to stay for the Q&A, like, or you can if you want to. But we'll just have fun with it, open the floor a little bit more, rather than it being kind of like lecture-y. I don't want it to like turn into like lecture Thursdays. Like I want it to be kind of fun, and webinar we can talk about stuff. So anyway, just a little heads up. I think that's what I want to do going forward. And yeah, we'll just give it some time, give it like 3 more minutes, and then we'll get into it. It does. I don't really want to give everybody a all right. So let me see. Let's see how thin. What's up, Paul? That's a long message. That's probably pretty good. All right. Yeah, so let's give it another 30 seconds and then we'll get going. I just want to look at Dooku as long as I can. Man, MYGN really just took off today. Solid trend. Look at that. Non-stop. All right, 7:05, let's get going. All right, so the topic of tonight is going to be traders' toxicity. Blake, you just made it. Yeah, so yeah, today we're going to be talking about trader toxicity. And I want to talk about it because it's probably something that's happened to everybody. And it's all something that we can relate to, and I think it's an important topic to go over, especially today in this, like there are some people on Twitter that are saying that it's a busy market, right? And like, good on them. But for my setups, and I know a lot of people in here setups, it's kind of been really slow and dry. And like, a lot of my trades are focused on small cap runners. We haven't seen a lot of them. Been hoping every single day for them. I know like a lot of people in the room have just been kind of coming for the morning and then leaving. And I don't blame them. But anyway, I think it's a good time to talk about it because this is kind of when, sometimes desperation can get you in the wrong spot right before the good market comes, and it's always a pain. So without further ado, let's get started here. All right, so traders toxicity. So for people just joining in, webinar is going to look just like most of the other ones, but I'm going to start changing it up towards the end, right before the Q&A session. I'm going to open the floor to inviting a person, probably just one person per webinar, on and just on a volunteer basis. And if anyone wants to come, I might schedule some. Like next week, I have James scheduled, so maybe it'll be somewhat ad hoc. If I don't have someone scheduled, I'll open the floor to see if someone wants to come up and talk about their week, or maybe anything they want to talk about, trades, whatever. And then we'll dive into the Q&A, and your choice if you want to stay for it or not. If you're comfortable, maybe you might want to help me answer it, right? Like, or give your take. What might you answer, right? Okay, so to start, the key traders this week for me were pretty just like honestly just shit, right? Like I didn't make any money this week. Like it was just such a terrible week for me, just because there was really like nothing I really liked. Like all I did was experimental large cap trades. It's kind of it. Like there were a couple small price movers, and I typically avoid stocks under $1 just for my personal preference. So like really there was kind of nothing in my zone, and that's going to happen sometimes. And I'm just like, I'm really focused on trying to keep my mental capital sane. Right? I want to be mentally prepared for when the big hitters come. When my A+ setups come, I don't want to be so beaten down P&L wise and confidence wise and emotional like preparedness wise that I don't want to be beaten the F down when my good setups come. What's so funny, Golden? Oh, this video. I don't want to just be beaten down. I want to be prepared and ready for when my setups come. And this is a big mental capital thing, right? Like this is what Alex was warning about today. Don't waste your mental capital and your physical capital on the crappy setups during the slow time. So my trades this week are really kind of, I'm like, if I thought last week I was scratching the barrel for trades, at least there was some small cap traders last week. This week it's like really dead. Anyway, so I traded Snapchat, and I think on like the 29th, or sorry, on the 30th, I traded Snapchat. And this was my idea of the trade. This was post good earnings announcement, and the move kind of happened over here. We got a big squeeze, and then we kind of we cracked hard and started to downtrend. We downtrended all end of the day here and yesterday, or it was yesterday for my trade. And so I'm just kind of looking for a simple trend trade, right? I'm looking for this level to reject, these lower lows to reject for, this is kind of the level that I'm risking off of. I'm waiting for the lower lows to reject a little bit on retest so that we can continue the downtrend, and it'll just be a simple fade trade, right? I'm giving it that chance to be nice and easy. And so on the trade, this is kind of what happened. So this right here is the opening to this day. I just wanted to capture this larger picture for the idea. This is what happened that day, right? And I'm sorry, I don't actually have my save chart because it was such a meh trade. I didn't even save it. I should have, thinking that like I didn't know that it was going to be like one of the only trades that I made this week, or like I was hoping to like not show this one and show better trades that came up, but they never did. So forgive me, I did draw this in here, but this was my trade on. I remember it exactly. I shorted it on the initial pop, and then I was like, oh, maybe it's just going to work. Added a little bit, just throwing orders out there. It's a small trade, so I'm just kind of playing around with it, adding on the spike after it fails. I remember I waited for it to fail. This is kind of like my last hope, like if it breaks through this 30-40s, I'm probably cutting it. It rejected, so that was really cool. But then like it just, I didn't like this, and it was holding, and I remember cutting it. I was like, I'm going to take this off or break even. I think I lost like 4 cents on the trade. I was just going for the trend trade. It was just holding too well. Like I didn't want this to hold. I didn't want this to hold. I didn't want a higher low to hold at VWAP. you know, like I'm glad I was out. Like it did eventually go lower later, but like this wasn't the trade I wanted, so it was a meh trade and I moved on. You know, it's just an experimental trade, but this is how I traded it. So Netflix, probably, I guess, I don't know, the best trade of the week because it was actually the only trade that actually worked, I guess, that of the couple that I tried. But it was just an easy money technical trading breakdown trade, right? So this was a trade where like I think I have the that's the full picture. So this was literally just, you know, like we popped up in the morning and I was kind of hoping for the trend to fail, right? This was after the big bounce, I think, and I think I was trying to this was on a bounce in the fade, and so I was kind of hoping for the morning pop to. I was looking for a breakdown, essentially. I was looking for a breakdown, and then ideally maybe we go green to red later on, and we keep fading down. We didn't get that. My target was low a days, and I got close enough to get my covers. You know, low a day was like 327.50. I counted 328s. 328.50 is close enough. And like I trailed at 329, and like I trailed out. It was very simple, very meh trade, kind of the theme of the week. But I was willing to get the key thing about this trade is I was willing to get back in if 329 failed, rejected, and came back down to break 328. Then I'd really feel good. I'd feel good that this technical breakdown, VWAP 330 whole number failed, right? Failed the retest, and now, you know, we're going down breaking 328. We have low a day and green to red right ahead of it as dominoes. I'm thinking, great, this could actually be a setup for another breakdown trade, and I'd be willing to get into that one too. But as you can see, like it just, you know, we rebounded from there and I never got my second opportunity, right? So that was that trade. On Netflix, just, you know, experimental trades on large caps because the small caps is so dead. No, this isn't an overextended setup. This was just kind of like a morning little technical breakdown scalp trade. So the overextended setup that I don't want to go too much into an old webinar, but I showed in the old webinar, it's not normally for large caps. It can be if there's a big catalyst-driven move for Netflix. If there's a large catalyst-driven move that's creating a hype train, is the way I like to call it, a hype train that creates an overextension. Then I feel that, you know, like once the hype train is over, there's an expected tank, right, in my criteria for the overextended trend break. First of all, there needs to be a trend. Second of all, there needs to be an anticipated tank, meaning I have to feel that market sentiment feels it's up too much, and it's literally just up on technicals. It's literally just up on the hype, the momentum train, and when the momentum is gone, the overextend rate, it's normally a pretty severe crack because everyone's waiting for it, right? And longs are waiting for it, shorts are waiting for it. So that's what sets it apart. This was just a simple technical breakdown trade, which is why it probably didn't just collapse. Right, it's not the same. It's not a collapsing trade. And normally the overextended trend break, it's typically an end of the day setup. I mean, it doesn't have to be, like I said, it can be. It breaks down in the morning after not breaking down in the prior afternoon that I expected it to. But normally it's an afternoon setup. This was a simple technical breakdown trade. This was, I thought, the line that was holding it up, and it failed. SMSI, now I didn't trade this one, but I still want to include it just because I felt bad for not trading it. But this was a swing long idea I had back on this day and the second day. After its first day held so strong, and the second day we couldn't even dip down past like 525. We were totally we were totally holding strong here on this day, and this is when I kind of started to like it for a long. So coming into this day, you know, I was hoping to see some failed breakdowns, which we didn't really get, but, you know, it did hold trend a little bit, and that was good, kind of good enough. So like over here, you'll remember a few days ago, like I actually got a couple messages that like thanked me for the alert. I didn't alert this. This was just an idea that I had, right? And you know, because it closed really strong, it's holding, and it's better after like failed reclaims, but we didn't exactly get it, but like, you know, a fail of, you know, a VWAP failure to break down, the morning failure to break down. These are good for it. I would have liked to have seen one last one. Obviously, that might have convinced me to get in. But this was an earnings winner too. And when I say earnings winner, I don't want to get like, I talked in the previous webinar on how I separate catalyst and small cap land as shit catalyst and not so shit catalyst, right? Like Earnings winners, I typically don't even care about, right? They typically go into the shit catalyst because like a small cap earnings that lost less isn't really earnings. And if they make like 1 cent a share, like big deal, right? Like, you know, and or 5 cents a share, and it's just like an oddity, right? Like next quarter they're gonna go back to losing money. Like that's typically a lot of these earnings winners. But the market's reacting to this by holding it. Like if you combine the fact that it is an earnings winner and the market is treating it as an earnings winner, right? It's holding, then you know it's a market react earnings winner, and you know maybe it has some kind of staying power to it. So it's more of a reactionary. Like I treat the catalyst almost as good based on how the market reacts. So there's still a lot of technicals involved in, like it's almost like a technical driven catalyst basically. But I didn't trade it just based on the risk reward of keeping my mental sanity clear. Like it wasn't a good enough setup. It's not one of my defined setups. It was more of an idea. And then I had to gauge the risk to reward of trading an idea that works out, or just mentally noting, hey, this is my idea. I think it's going to happen. Let me just mentally kind of keep it in mind. If it does work out, like maybe I can add it, you know, into my mental like list, right? Like, hey, last time I saw this setup, it worked. Maybe next time I try it with small size, right? Like, whereas the risk reward of taking the trade and having it not work, the first thought that's going to come into my mind is, how dare you trade something that's not even a setup? Look at that. You deserve to lose money, right? I didn't want that. Like that the risk of this trade was, you know, outweighed the reward of being like, oh, cool. Like I was right. Like I can say that, oh, cool, it was right without the risk of losing money on this trade because it wasn't that confident of a trade. But it's something that I'm keeping note, you know, stocks that close strong on a market reacted, like it's holding well after the first day, and it has a catalyst that's subjective, right? Earnings winners are normally shit, but they can be good. And if the market's treating it as a good catalyst, maybe, you know, that's how I'll label this as a market reacted, like good catalyst. It doesn't have to be an earnings winner. It could be like a contract win or like an investment, whatever the normally shit catalyst, but the market's treating it as important, and I want to behave to what the market is treating it. Oh, only small cap earnings, because large cap earnings actually matter. Definitely for small caps. I don't, yeah, like, I mean, if a large cap has good earnings, I won't put that in the shit category. So yeah, that was that kind of idea. By the way, I'm glad some people made money on my alert, right? Like I didn't really alert it, but some people took it. I wish they wouldn't, right? I'm just expressing ideas. And Apple, I did this one today. This was a break-even trade because I lost first and then I won. But a key thing to note, after my snap trade, like seeing this channel and this chop, basically, it really reminded me of how much I didn't recycle and how much I really want to make recycling a part of my process for, especially every single large cap trade. I want to be recycling, because I feel like there's just more channels in large caps than small caps. Sometimes small caps just die and that's it. And you know, there's no big channels. A lot of times in large caps, there's a lot more range in the channels. So I took note of that in this trade. And so I was really kind of trying to do that a little bit more with Apple this morning. So like I failed on the long. So my idea originally was that the stock was going to soar today, because I thought like the SPY was gapping down pretty hard. And I thought the SPY was going to just go straight back to 300. And I was eventually right, but like, you know, I didn't time it very well. But so I figured the SPY would go straight to 100, and Apple having good earnings just like the last day, I figured it would just soar straight up too. So, you know, I got in here thinking that like VWAP's holding. I'm like, you know, it's not the best entry, but I'm, you know, it's not, there's experimental trades anyway. My plan is to add over high day. I don't get it. I get stuff. I sell it. And then right at around this point, I start to think that like the market's still going strong and this just epically failed. So I kind of switch bias a little bit. I flip short and I'm thinking I turn this into kind of a relative weakness kind of thesis. And I'm right for a little bit. You know, at this point, the SPY was ripping and Apple was weak, and I wanted lower, but I forced myself to recycle based on my other snap trade and kind of how I want to trade large caps in general. And there was a moment here that the reason why I included it, it's kind of a boring trade. I didn't have to include this, but the reason why I included it is because there was kind of a moment of truth here where I absolutely knew exactly when to get the F out. Now, I didn't long it for the same wasting mental capital reason as the other one. if I would have flipped long, flipped short, then flipped long, and then lost again, my mental capital would have been just totally wrecked. Like I didn't really want to go over that. Like I didn't want to go through that. So I just I didn't flip long, sad face. But there's a moment here where like it was really easy to identify when the relative weakness failed. And whenever I trade relative weakness trades, I'm always on the lookout for when the relative weakness might end, right? And so typically in large caps, I feel they happen around 10 to 10:30. This one kind of happened early. But so there was a moment, and it's on the next slide, when the SPY was going really strong, and this is when Apple kind of tanked, right? This strong candle happened, I think, kind of like when Apple tanked. And that's when I flipped short, because I'm like, wow, so this is pretty weak considering what the SPY's going exactly up like I think it should, and Apple's not. But then there was a moment here when the SPY was truly going strong, right? And Apple was just tanking, right? And so I was always constantly on the lookout for when is the relative weakness, if it's going to, when is it going to turn around? So I'm like, I'm almost waiting for a pull on the SPY, and then I'm seeing what Apple should do. With a relative weakness trade, if the SPY is going up and Apple's staying kind of weak, like when the stock was pushing up, this was a bounce attempt. When the SPY pushed up, it like bounced up to here to VWAP and quickly failed again, right? And I was ready for that. Like at this point, I had the relative weakness idea. These are stock. This is when the SPYs are ripping new high days, and then the SPY has a little red candle and it's failing, right? And so like I'm waiting for a big pull on the SPY, because the big pull, and now I'm waiting for the big pull because that's supposed to be profit city for a relative weakness, right? When the market's strong and your stock doesn't do crap, right? When the market tanks, it should really pull your stock down. And when we finally got this big pull, I'm thinking profit city on my Apple trade. I'm thinking we're going to break lower days, and this is where I'm going to get the cover close to the red to green area, right? For that, retracement. And right here on this candle is when like we get the SPY pull. I put my shares back on here, and we totally just zoom right back up. And that immediately I knew this trade's over. The trade is done. The relative weakness is done. Like if the stock didn't tank when the SPY pulled like that, my thesis, it doesn't mean that it can't go down. It totally could, and I'd probably hate it if it did. But the reason why I'm in the trade was for the relative weakness, right? The relative weakness was the thesis behind that trade. So the second the relative weakness was gone, like I knew I had no business being in the trade anymore. So I cut it immediately, and it was a beautiful cover, like best cover. Like if I would have fought that, I'd be so mad. Like I would have like, oh well, let me just see if it can like get up here to 215.50, right? Let me see if it can get to 216. Like if I decided to move my risk down, I would have moved my risk up in this trade. I would have been in a world of I hate myself. So that was that trade. Good lesson there. That's why I included that one. Because a lot of my large cap trades are based off relative strength with relative weakness. So so recycling, Oleg. So recycling is basically when and I typically do 50%. So recycling is when you you get into a position, like you hold what's called your core position. So let's just pretend, let's use a size. If I was shorting this 1,000 shares, right, and my target is like $212, but I don't think it's going to go straight from 215 to 212. I think there's going to be ups and downs in between. I can essentially take advantage of those ups and downs to cushion my P&L on its way down to my target. So as the stock pulls, I'm covering part of my position, normally half. I'm covering half of my position, and then as it bounces back up, I'm putting the position back on. I'm covering 500 shares, I'm shorting 500 shares. As it pulls down again, I'm covering 500 shares, and that's kind of what I do, right? Like you cover, and then you reshort. You cover, then you reshort. You cover, then you reshort. You cover, then you reshort until it gets to your target. That's the basic concept of recycling. You're recycling half of your position, and you're leaving half of your position on. And you can, this is personal. You can change it to like, I'm going to recycle only a quarter, only a third. I'm going to recycle 3/4 because I'm really aggressive, right? That's recycling in a nutshell. Yeah, and so the market sentiment is just dick. Like the market sentiment just sucks. Like There is, wow, it actually showed the GIF. That's so cool. I thought it was just going to be a stagnant picture. The market participant, everything is literally just dying, right? SMSI is holding, but it didn't, like, I put it as a green ticker on it. It's a positive for the market, but like it didn't really do anything after that day. It's just kind of still holding, but I guess it's a green in this, it's somewhat green in this market. Apple was, like showed really good strength. Now, all of this, by the way, I made all of this before this stupid Trump tweet today with the China tariffs. So this is what the market was before the Trump tweet. So I kind of want to like separate it. The market's still pretty much dead. There's no runners. There's, the Netflix recovery is still good. The Beyond recovery was good until like it tanked today. These are the large cap vibes. SPY reclaiming today, reclaimed 300 before the Trump tweet and the China tariffs, and it just tanked. So that's obviously the negatives. July earnings is in full force, right? Like it was full force last week. It's last week. It was full force last week. It's full force this week, and there's just no movers, right? So these are all the negatives. Like I don't even have any sparks of hope. I don't even know what to look forward to tomorrow, right? So as far as technical setups, which is what I like to trade and what I think most people trade, it's pretty bleak out there. I'm sure there's fundamental traders that, there's always something to dig up, right? There's always something to dig up. And if you're a fundamental trader, this is the time that you're taking to research your stocks, to go through all the tickers you think that, you might see potential PRs for. Any, if you have a big Excel database, right, of stocks where you have warrants listed for each individual ticker and when they expire, if their expirations are coming up, this is the kind of time where you're taking advantage of the slow mover time, preparing for when they might come up, right? So there's always something to do, right? There's always work to be done. Even when the market's slow, there's always work to be done. The people who take breaks during this time are the people like who aren't really like you kind of want to be taking some breaks if you need it, but I mean if you're fresh and ready to go, like this is there's always something to do in the market. There's always something to study. There's always something to learn. You can be, like I said, researching future PRs that you think are going to be happening based on like warrants expirations or shares becoming available to dump, right? You can be scanning like technical setups that look like they might be experiencing for movers. Like there's always something that you can be doing with your time. But as far as sentiment, like DMPI was a very good example. Like it was a runner and it almost had potential. I almost thought it could be the one that reignited the small caps, and then it just totally died, right? Just market is showing no faith at all in runners, right? APHA, we'll go over that. Yeah, I'll pull it up and get it ready. Yeah, and it's pot too, so that's good. Always good when something is up a lot after hours and there's a sector attached to it, because then we can get sympathies, right? So I changed this one from last week. We were in the decrepit market. This is like last week. It's funny. It's so funny how like it's literally like every other week that we can like almost go in a circle. But like last week we were here, and I thought we were going to be here, but maybe we're taking a little pit stop to the decrepit market first. As far as technical market, this is normally the way it goes. There's a buyer's market, a seller's market, and a dead market. And right now we're full in the dead market, right? Last week it was kind of the tankers market where we had some movers, but everything tanked. Now it's almost like there's no movers. And I think eventually, as July earnings season comes to a close, or earnings season will be coming to a close, we're going to start getting into the everyone's restless. Like let's start buying the PRs again, right? So into some trader topics for the week. Oh man, I'm so excited, Joe. Like I'm ready. Anyway, so a trader topic I want to go over. This is like probably the shortest slide I've ever done, but it's a really important topic. I don't want to sell, it'll be the bottom, right? Or I don't want to cover, it's going to be the top. I don't want to cover, I don't want to cover. Like that means for sure that you're going to sell the bottom or cover the top. Like the not wanting to sell the bottom, that means that you don't want to sell you don't want to sell because you don't think the trade's over, even and if your stop is and like the stop's been invalidated and you're still holding on. Basically, what this means is your stop, according to your plan, says that the trade should be over. Now, if you ever are past your stop, but you don't want to sell because it might be the bottom, first of all, that shows that you don't have a lot of conviction in your stop. But basically, what it now turns into is you're no longer in for a stop. You're no longer trading with a stop attached. Now you're trading with a max pain attached. Now it means you're going to stay in the trade until max pain is reached and you're going to get out. And more likely than not, max pain is the bottom. Like, because your max pain is probably going to be everybody else's max pain, because it's probably going to be on a large volume candle to the downside or to the upside. And these are exhaustion candles, basically. Having this mentality, like you don't want to sell, you don't want it to be the bottom, you don't want to sell, it's going to be the bottom or cover the top, basically ensures that you're going to sell the bottom or cover the top. So this is very important. If you ever catch yourself doing this, like you got to just own it, right? You have to just own the trade. You have to. Unfortunately I don't. But yeah, this is like a trader topic that's going to be, that's like, it's almost perpetual, right? Like this is in every trader's mind every time they don't want to stop out, right? If you like most of the times your stop is there for a reason. The trade is over when the stop has been breached. So most of the time it will probably keep going down after stop, if your stops are valid, right? So, or up for a short, right? It just means that you're going to get out at max pain, and you never want to get out on max pain. Not max pain, bro. Oh, that's it. Yeah. So this is a big one for me, and this is a personal topic I kind of want to go over, and it's the I hope. It's the I hope versus the I think battle. And I posted a little bit about this in the chat, but I knew I wanted to go over it in today's webinar. So it's personally my biggest struggle, and I didn't really have this struggle until I started longing and shorting. But I also used to have this battle when I would short stocks, but I wanted it higher, right? Like, I wanted it higher so I could short a better setup, but I didn't think it would get very high. It's the same kind of struggle. So pure short sellers can still resonate with this. So the I hope versus the I think is what you hope the stock's going to do versus what you actually think it's going to do. If you had a gun to your head, what are you going to do? If you had a gun to your head, what would you trade, right? How would you trade it if your life depended on it, if your family's life depended on it? If you had to pick the direction, which way are you going to go? Now, that it may not be the way you want it to go, right? Like, so for example, DMPI. I posted about DMPI. I thought it was going to just die. I thought it was just going to die. Or was it DMPI or was it the other one that died? I forget. But I posted about it in the chat. Like, I thought this stock was going to die. I was really hoping it wasn't, right? And so this hope can sometimes force a long into me, and it's not the best. Like, it's not obviously a good trade. And so this kind of stems from my long for short stock when I say that longs inherently have an innate good risk to reward, but a bad probability in the small cap land, whereas shorts will typically have a inherent probability factor to them, but the risk reward is often really bad by the time this probability is no, right? So like normally it's going to be a huge death candle or wash candle off of the highs, and it's probably still going lower, but now like you have to be able to sit through like pushes, right? You have to be able to sit through pushes, and the risk reward has been kind of stolen from you, but the probability is good. And so these are the two ways that you can make money in the market, right? Risk to reward really good, and not necessarily win more than you lose, or high probability is really good, but the risk reward doesn't necessarily have to be that great because you're winning all the time. So sometimes there's a strategy for longs where it's not necessarily like you're trading. If you're trading for momentum, you're kind of like, you can, like, I do this sometimes with sympathy stocks where if like Dries goes nuts, I might buy GLBS, ESEA, and SINO. I might buy all three, and one of them is likely to run. And you know, what am I going to lose if these two just do nothing? I might lose, I don't know, 10 cents or 20 cents on both of them. But the one that I buy is going to really go, right? It's kind of just diversifying the stock pick a little bit. Like one of them's going to go, and right, it's almost like hedging. One of the, it's more of diversifying, right? One of them is going to gain traction as a sympathy, or should, right? And I'm just going to eat the loss on the other two if they don't also go, right? If they don't also go. But like the strategy for that is that one of them is going to catch the momentum, and all I need is one to catch. And the risk to reward of the trade is going to make it buying all three profitable, right? I don't want to buy SINO only and then watch, you know, ESEA go, right? Because then my idea is right. There was a sympathy play. I just didn't buy the right one, and I just took a loss. But you know, if one of them is going to go, typically they're going to go pretty strong. So sometimes with longs, like sometimes I'll get in, and I sometimes I expect stuffs, right? But I have to be cognizant and weigh the you know, the I think what's going to happen versus the I hope. What I don't want to be doing on this long, if I decide to long for the, I have to make sure that I'm not trading for hope, and I'm trading the specific, I'm Momo catching strategy where it may not work 2 out of the 3 times, but the one time it does, it's going to pay me, right? So I have to be very clear that I'm not trading for hope, and then I'm trading for a specific strategy that might not necessarily have the probability that the I think strategies possess. So, and that's, I can't repeat that, I think, but I think that I phrased it perfectly there in my brain. I practiced before this webinar saying that, so I'm pretty sure I said it right. But basically, you want to make sure that you're not just trading on hope, that even if it's a low risk, a good risk reward, but maybe low probability strategy, that you're not taking this trade with an enormous amount of size, because the probability is that it's not gonna work, right? So I think part of the trade, like you think it's gonna go down, it's not something you want to be taking a whole bunch of size on, because, and if it's really gonna go, you don't need a whole bunch of size, right? So you want to separate them because hope is an emotion. So normally, and I'm gonna, when you have this kind of conflicting thoughts, it's best to just leave the trade alone, right? If you think it's going to go down but you hope it goes up, it's best to just like do nothing, right? Even for a short seller, right? If you think it's going to just die, but you know, you hope it goes up, you know, you don't want to FOMO and say, well, I want to be in just in case it doesn't go up. Now, here's where you're separating on the short side. You're separating FOMO from the, I really don't think it's going to go up, from the probability strategy. You really have to separate the, am I trading this because I'm afraid it won't go up, or am I trading this or am I trading this because I think it's going to go down? It's a split hair, but you have to make sure that you're making the distinction in your brain. So it's the same situation if you have a smaller time frame trade idea concurrent with a larger time frame trade idea, right? Like if you're, and this is essentially what recycling is at its core, right? Recycling is basically you're covering some because you think there's going to be smaller time frame bounces in between your larger time frame idea. That's essentially what you're doing when you recycle, right? You're taking advantage of mini patterns in between your big pattern. So when you have situations like this, like recycling, you have to make sure that your brain isn't like that. You have to make sure that you're separating them, and that you have supreme discipline in the stops associated with the minor time frame, right? Or the less probable high risk reward trade in the long situation, right? You want to be sure to make sure that your stops are so appropriate with the smaller time frame. Like if I wanted to buy DMPI, right? And so you can think of this as a trend trade, right? If I wanted to buy a trend that's holding trend, but I also want to short it because I think the trend is going to break eventually, but I want to ride the trend as long as it's going to go up, right? That's a common situation, right? If I'm trying to be a trend trader, I can long the trade, but I have to be sure that I stop out in the trade soon enough to where I'm not bag holding the mini time frame, so I can still participate and capture the larger time frame trade, right? So in order to do this, you really have to be dialed in, and this is why it's so much easier, especially for new traders, to have, when you have conflicting thoughts like smaller time frame and larger time frame trade ideas, just stick with one and leave it alone until you get the one, because you really have to be mentally dialed in. You really have to be on top of your game to be able to do this, right? This requires an insane amount of focus and discipline to where you know exactly what you're doing. If there's any kind of doubt, any kind of debate, any kind of wiggle room to, well, like maybe I'm gonna stop out, then it's not for you, right? Then it's not, or you're not in the right mindset to take this kinds of trades, right? If you're gonna be flipping short, flip, or if you're gonna have any kind of flipping bias at all, flipping bias is the opposite of conviction. They're kind of like antonyms. If you're ever gonna have like conflicting thoughts, but maybe you like a trend trade where you might want to take advantage of the trend, but you want to be there when the trend breaks, any kind of that, you have to be super on your game and really dialed in to be able to capture that, because it's very tough to have your brain on this flexible mindset, and it's very easy to fall into the revenge style of trading, right? When you allow yourself to flip, right? Or even if you're solely short selling, if you allow yourself to flip between, well, let me short it a little bit here now, but there's a better resistance up top, right? Like Joe and I talked about this in the last webinar. You can't hold that red to green short and then also trade the plus, you know, I don't know what percentage Joe revealed to us was the, if it does do that, this is typically where it fails, at this next resistance line. You can't hold it, right? You have to be so dialed in to where your stop for the green to red trade is there. Yeah, I thought it was 25. I just didn't want to quote above prior. Exactly. You can't hold it there, right? You have to be so dialed in to where you know when your green to red trade is wrong, so that you can be there when, because you can't hold the trade yet, so that you can take advantage of the second one, right? So if you're just, it works both between the I hope versus the I think, right? It can also, for solely short sellers, it can be like the FOMO versus the best trade, right? But you think that the best trade's not coming. So this eventually leads into another great topic I want to talk about in a future webinar, and that's I want to talk about this ideally when I host Bao on this. It's going to be about range breaking and range holding, and taking advantage of basically recycling what he's the master at, recycling and taking advantage of these little being so dialed in and taking advantage of these mini time frames in between larger time frames, and truly trusting ranges. This leads into a great topic. I just wanted to, I guess, I don't know, plug that for a future webinar. But it kind of gets into, so it gets into like explosiveness versus consistency, and this is what's going to lead in, right? With long trades, there's this explosiveness, right? And typically you're hoping for the explosiveness, right? Or like if you're trading range break strategies, you're typically hoping that range breaks, there's going to be an explosion when the range breaks, right? And so this is often, you hope the range breaks, right? But you think it's not going to break. And when ranges break, why do they get explosive? They get explosive. It's explosive in nature because it doesn't happen very often. Like most of the times, ranges hold, which is why when they do break, it is explosive, right? So I typically try to have, like, as a longer, I'm always going for like the explosiveness of trades because that's where the money is, right? Whereas Bao is kind of the opposite. Bao goes for the consistent nut. You see him constantly recycling, constantly covering its support, shorting at resistance, right? This leads into the future webinar with Bao trades on a super high probability setup time frame, and I trade more on the other way. And so there's a little bit of a discrepancy in not discrepancy, there's different styles, right? He's the best channel trader in the world. But yeah, this kind of leads, this whole slide leads into another topic that I'm going to go into in greater detail in the future. So that's going to be the one I want to do when Bao comes on. So anyway, so what I want to talk about today is, yeah, me too, Golden. I look forward to it. Um, in the Psych Center today, we're going to talk about traders' toxicity, right? And this is every trader in the effing world has been here, has experienced this, and if you haven't yet, you will. I promise. It's when the Titanic sinks. It's literally when the Titanic just breaks, and like everyone just goes nuts. Like everyone's just freaking out, and this is what's going on in your brain, right? Just everything, like reason, rationality is all gone, right? It's almost fun to talk about because we've all been there, and it's just so funny. Like, it's when you fall into the pit. And I don't know, I'm gonna call it the pit. I just made that up, but like it's when you fall into the pit, when all of your emotions, all of your stress just comes to a boiling point, and it's just too much. Like you're on a red streak, you just don't care anymore. You find yourself saying, "F it," right? Just I don't care, right? Like your trades are just spiraling one after another, like. And you just feel like you just can't catch up, and just everything is just like you're just totally sinking. Like it's just like your P&L is just going down. Your account's just in the total weeds. Like you're like, man, like it's gonna take forever to get back up here. Like your losses are getting bigger. This, it's probably your largest red streak of your career. And this is when irrational decision makings actually happen more often than good decision makings, right? It's not even a 50-50 thing. Yeah. This is what happens when you fall into the pit. You just keep digging yourself down. You just keep digging yourself into this hole. And when you find yourself yelling at your screens, this is, you're in the pit. And another good indicator is when you start to notice when losses don't matter. And when you stake your confidence on trades, like you're staking everything on your trade of every single day. Your entire confidence is set into this trade. Your confidence is tied to your P&L. Like your P&L is tied to your confidence is tied to your P&L. Your P&L is tied to your emotions, and it's how you it's how you react in like everyday life, right? It's basically a form of YOLO when you stake everything on trades. It's like I'm gonna go big in this trade to recover my losses, or that's it. I'm gonna be in a bigger pit, and tomorrow I'm going even bigger, right? It's when you stake your like when you need to win, and this is why I created this little GIF, right? It's very self-destructive, and you will be able to see it. You will just ignore it, and you're gonna be able to know. It's just you ignore it. And I want to go over some personal examples, but I made this little meme like risk management just gets thrown out the window because why? You need to win. You need to win for your psyche. You need to win for your P&L. You need to win to regain your confidence. You need to win to prove that you can do this forever, right? And all of that somehow depends on this one trade. And it doesn't even have to be a new trade. It can be a trade you've been fighting for hours or days. Like literally you have to win. And like what's really funny is traders feel like they have to make their money back on the one ticker they lost it on. And this is just a big ego trip, right? Like you have to win on the stock you lost all your money at. So let me take you into some examples of how I've been toxic, right? So there have been times in my trading career where I would take a position the opposite of what I thought. I'm like, I think this is gonna go up. I'm shorting, or like I'm shorting this. I think this is a good short. I'm gonna buy it up here at the high of the day because I know if I short it, it's gonna go down. So they know this is the worst. They know because they know I'm in. They know I'm in, bro. They know I'm in. Like I mean, the little mice working behind the system are tracking my P&L, or they're tracking my account numbers, and they know that I'm in, and that's why none of my trades are working, right? Like, so I'm buying this piece, and you always buy, like, oh, sure, see, they knew I was gonna do this, and they knew that I was gonna try and trick them, so now it's going down. I get it, you guys. And when you fall into this mindset, it's so laughable. Like, if someone else is, like, listening to you, like it's so laughable, like, but yeah. It's basically you're trying to win on pride, right? Yeah. And so this is the worst one. This like I'm laughing about it now, but like I honestly tried to lose on some of my trades because why? Because then I'm gonna win. I tried to lose, like literally, like I remember being on Skype with a tab, and I mean like, and like I'm literally just like a stock's this tanking, right? It totally just tanked, and not only am I missing out on the short, but I'm buying this, and I'm like, bro, I'm adding if it goes lower. I'm adding if it goes lower. Why? Because like I want to lose. I want to lose. Like I want to lose more money. Like I haven't lost enough money yet. Like I got like, and I just had to leave. Like I eventually like it's just the worst pit to be in. And like you talk about irrational decision making, wanting to lose is about as irrational as it gets. And like I've fallen here before, and like I can hardly doubt I'm the only one that's falling this low, right? What you need to have, oh, and this is one more thing, like, oh, another way to notice this is when your losses get bigger and you stop caring. Like anybody who has like $100, like, oh, $100 is a lot, I don't want to risk 100, or like $500, like $200, $300, $400, whatever, that's a big loss, right? But all of a sudden you're down 1,000, and then it doesn't matter if you're down 1,000, or it doesn't matter if you're down 1,200, or if it doesn't matter if you're down 1,700 or 2,100. Like, how come that $400 doesn't, like, losing $0 to $400 matters, but losing 1,700 to 2,100, like that doesn't matter? Like that's how you know, right? Like it's totally, you're in the pit, right? Like you just, yeah, like when the losses get bigger and you stop caring. And this is kind of like how like it's so funny. Like I talked about this in a previous webinar. Like it's so funny. Traders feel like they just have to win. Like you can be down 400, then down 800, down 1,600, down 3,200, and then get back down to minus 1,900, and you feel fucking solid. Like, oh, I just made back 1,300. No, or 1,200. Like, no, you didn't. Like, you lost 1,900, but you feel good because you won finally. Like, this is what it's all about. It's all ego, right? But yeah, like you just stop caring about losses. Like when you stop caring, when you honestly try to lose, when you try to take opposite positions of what you think, you are in the pit. And like RIP risk management rules. So this is the toxic thinking, right? Like what's another example of a toxic thought? Like they know I'm in, right? They know I'm in. Like I'm trying to lose. It's gonna do the opposite. You know, like like, oh good, 3 cents win. Finally, the market gave me some kind of win. Like I caught myself saying that before. Like the market lets me win 3 cents, but God forbid I win 20 cents, right? Like this is when you know, like, and so like how to rebound from this kind of crap, right? You have to take a break. You absolutely have to take a break. And it can vary, but like normally I'd say at least a few days, right? Like a week's great. Like a week, take a week off. Don't even look at the market, right? Just come back and be like, what the shit was I doing, man? Like I was honestly trying to lose money. And then like, because in a week you go back into regular life outside of your trading desk and you realize just how much that $400, $500 that you didn't care about losing more on the trade, like really how much that $500 can spend. So taking a break, getting away from the trading world, because it's all just numbers, right? We just see like gas numbers, right? We sometimes forget what the money actually is. Lock your montages. Now, I kind of do this routinely just in safety, but if you don't do this, locking all of your montages will save you from trades. It has. It's definitely saved me from trades. Just on a, now it's also like messed up some trades for me because I do it routinely every day where I'll lock my montage and I won't unlock it and I'll try to get it and I won't get in. Like that sucks, but like it's definitely saved me from some trade. And when you're in the pit, you definitely need to lock your montages and only unlock it if you have a reason to, right? Like as Harry said, only, like force yourself to have a reason to unlock the montage. Sure, if you're undisciplined, you're going to unlock it anyway, but any kind of roadblock you can put in your way can benefit you, right? You need to break yourself out of the pit. Create a list of, now you should already have this, but you should create a list of setups. If you don't have it, that's probably why you fell into the pit so hard. Create a list of setups that you're only allowed to touch, and if one of your setup comes, are you allowed to unlock your montage, right? It's the only time you're allowed to trade. Get back to your basics, go back to basic profit taking, and the most important thing I think is to talk to other traders, right? Tell us in chat, like admit defeat, like, because this is why, like, a lot of times you want to keep fighting, you want to keep doubling down, you want to keep revenging, you don't keep wanting, you want to bury it, right? Because you don't want to admit the defeat, because it's all stemmed from not allowing yourself to lose. So just totally admit, post the shit on Twitter, like post it in MIC, guys, I sucked. Like, I just traded this like a total a-hole, right? It's gonna make you feel owning up to it. It's gonna make you feel like this imaginary weight you didn't even know is gonna be lifted off your shoulders. Why? Because when you start sharing this kind of stuff, you start learning just how much it really doesn't matter once you post it. Nobody gives a shit, because you know deep in your heart that every trader goes through the same thing. Yeah, like seriously, like this weight's going to be lifted off your shoulders, because you're going to realize it wasn't so hard. Like, nobody cares. Like, you're going to be able to laugh about this. And if you don't do any of this, at the very least, you cannot hide it from your tab. It's the most toxic thing you can do, is to bury this mistake, right? Because what you're doing by not telling your tab of a trade, like, I'm sure every one of you guys have tabs, and all of you guys have hidden stuff in your tab because you want to seem like you didn't make that mistake. You want to show like that you're this, like, that you're closer to perfect than you are, right? Like, we all want to, like, you don't want to hide it, because when you hide it, it basically what you're like, there's no accountability now. You need to have this accountability. You need to have this kind of like keep in check. You need to have your nuts kicked. Like, you want your tab to say, what the fuck, man? Like, how can I help? Like, you want that stuff, right? If you hide stuff from your tab, you're literally just being dishonest with yourself. It means that you're going to do it again, because there's no downside, right? What's the downside? There's no risk, right, of you not doing it again. Why? Because you're just going to hide it next time too if it happens. So you can't hide this stuff from your tab. And this isn't ideal. Like, this is kind of breaking what I normally preach, but when you're in rehab mode, force yourself to end the day green. If there's a good setup later on, fuck it. Like, you're green, keep it. Your sanity needs it. The risk to reward, your mental risk to reward, the mental risk to reward doesn't equal the trade risk to reward, right? Even if it's a good risk to reward setup in the trade, your mental risk to reward of losing your green day is catastrophic. It just keeps you in the pit. You want to get out of the pit. You need to have these green days. Force yourself to end the day green, and then force yourself to make your second day green, right? Like, if you're green on the second day in the first 5 minutes, good, leave. Have the rest of the day to yourself and be like, I made money in 5 minutes. Look at how awesome I am, right? I'm so awesome. I made money in the first 5 minutes of the day. All these other guys can fight for any other setups that are out there. I made my money because I'm a good trader. This is the kind of pep talk you need to be giving to yourself, right? And you need to close the day green, no matter how small, right? Now, sure, for the normal trader, for the normal for a trader in a healthy mindset, you don't want to be doing this. You want to be taking advantage of every single opportunity that's there. But when you're in rehab mode, it's more important to get yourself out of the pit than it is to really like focus on making the most amount of money, right? So and I normally never preach editing your process, right? Edit your process. Be more conservative. Take those quicker gains. Get the green. Get the green. Get the green. Get the green. And size down, right? This is normally not something you want to do, right? You don't want to size down for setups, but like when you're in rehab mode, you kind of need to. It's gonna be forced. Like, size down, get the green. Yeah, you're gonna be green 20 bucks. You're gonna be green 50 bucks. You're gonna be green like 20 bucks and 50 bucks. It's not gonna make back your loss. You're gonna feel like it's pointless, but it's not, because at the end of the week, when you look at your weekly P&L, you're gonna see green, 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 and you're gonna be like, what the F was wrong with me last week, right? It's very depressing to be in this place. Yeah. Oh, let me just see if it works out. Another example. Like, that's toxic. Let me just see. I don't care. Let me just see. Throw everything out the window, right? Yeah. Your tab is your market wife, and they can beat you with something thicker than a thumb. And oh wow, 8 o'clock on the dot. That's pretty perfect. And that's the end of my slide. So, yeah. So right now I want to open the floor to anyone who might want to come on, and I don't know, you can talk about what we talked about in the webinar, you know, what you agree with, what you disagree with. We can go over a trade you did, or maybe trade you want to talk about. I want to open the floor. If anyone wants to come on, you're more than welcome to. And then we'll get it. And then you can start asking questions too. We're going to go over Q&A. And if you're a guest, you don't have to stay for the Q&A if you don't want to. Yeah, we can get Joe up here again. I won't say I was thinking after Joe's fast comment. Yeah, next week we're going to have James, so that'll be taken. At what point do you consider that your idea is confirmed? For example, if I want to see oh, sorry, has it been clear? My mic's been so far away. At what point do you consider that your idea is confirmed? For example, if I want to see a higher low, by the time I see a higher low is formed, the stock would have already moved a lot. What are the cues to identify it sooner? All right. So this goes back into something I talked about a couple webinars ago, when I talked about confirmation of setup versus confirmation of outcome, right? Everyone thinks confirmation means confirmation of outcome, but that doesn't make any sense, because like you just said, if you're trying to buy it, you want to see a higher low, by the time the higher low has been proven itself, the confirmation of the outcome is already there, and now your setup, you kind of missed it, right? So this is, you need to have like, think of, let's just do an example with MYGM. So if you wanted to do a higher low trade on, I mean, it's cheating because we can already see the chart. If you wanted to see a higher low trade, like let's say this one, higher low trade on MYGN, what's your setup for a higher low? The setup for the higher low trade needs to be this, right? This is what you need to have a picture of your setup, like in like your setup category. What does the stock look like? A, B, C, D, E, F, G, H, I, J, K, L, M, N, P, Q, R, S, T, U, V, W, X, Y, Z is when you enter. So is A through Y all set up and ready to go? And you don't want to wait for Z to happen, because if Z happens, you've missed your trade. Z is the time to act, because you think if A through Y happen, Z is happening next. So what a lot of times, what people are, a lot of times, okay, cool, Joe, I'll let John after. A lot of times what people will do is they wait for Z and they say, well, Z happened, and then they buy after Z, and now their risk reward is shit. You need to, you're right, your setup needs to be A through Y, and you enter before Z. A through Y, when A through Y happens, that is your idea confirmed. You cannot confirm the outcome with the trade, right? You can only confirm A through Y, and there is going to be that risk that Z doesn't happen. Like there's going to be the risk that it breaks down here, right? So I guess that's the answer. The confirmation of the setup is going to be the most important, and you can't wait for the confirmation of the outcome, right? But that doesn't mean that, like, if you wanted to, if your setup requires, like, if I wanted to buy a high of day break, I'm not buying right here. Maybe this is the confirmation of the setup. So I did wait for it to break, and this is what the setup looks like, right? If this is my A through Y, then I'm buying right here, right? You know, that's another example. So anyway, I'll bring Joe on. And let's see, I'm going to try, which one? Joseph Kelly, there's two of them. Oh, there's only one of them. Joseph Kelly, 91? That one? Okay. I'm going to try to promote you to a panelist. Now you're a panelist. And you're unmuted.
So can you hear me?
All right. Joe's back on again. Right on.
Is it echoing?
It is a little bit.
How about now?
This better?
Yeah, sorry. I was trying to do it from my phone because I was looking at it on my screen. But anyway, I was trying to do it from my phone, but apparently it only did it from my computer. So hang on.
But anyway, I hope that was flash.
There we go. This should be better now.
So yeah, it's so good, but
it's so good.
it sounds so amazing.
So good. Anyway, so my question is a question I get asked a lot too, and I never see anybody ask these types of questions because I don't know if they know that this type of Q&A is like this. But the first question is like for everybody for all the members that they find like the setup that they want to track or that they want to trade or that they understand. When you found that setup, did you find just one? Did you find just two? Where did you start finding your edge? And when you found your edge, what was your mentality when that trade came around? In terms of risk management, in terms of basically how confident you were ready to take the trade. Can you hear me?
Oh, sorry. Oh, were you asking?
I'm asking you.
Oh, crap. So one more time.
I'm not talking. I'm coming on here asking you questions, bro. I said I got questions, not answers.
One more time, Joe. One more time, Joe.
Okay. All right. So, if this is a question I've gotten asked a lot, many times, is that people come in and they see the 3 setups that we talk about, 4 setups, or maybe even 5 setups by now, and they always ask which one is going to be the best, is going to be the one that I want to trade, and they find the one that they want to trade, right?
Right.
And like for you, when you started doing this, did you find one setup that you wanted to trade, or did you find 5 setups that you wanted to trade, or did you find 2, 10, whatever it may be? And then when that setup or setups came along, how did you attack it in terms of risk management and in terms of confidence? Did you immediately, as soon as you saw that setup, you were like, sweet baby Jesus,
oh yeah,
this is like a fresh gift on a Christmas morning? I mean, or were you a deer in the headlights, being that you knew the edge, you knew how you needed to trade it, but it's that hesitation of hitting G1 on the hotkey, and you're like,
yeah. So the answer is
I was talking about.
The answer is I was a little bitch. That's the answer. I was a little bitch. Like literally, like I would see it, I would know the edge, and I would be like, yeah. But like I actually said when I first started trading, and I knew it was crap, but I was like, maybe I'm gonna be the first trader to not ever have a loss, because I seem to get this pretty good. Like I actually said that. Like no bullshit.
What a dick.
No, bro. And so just having that in my mind, like I'm not gonna lose. I'm so right. Like I would see the setup, I would know, and I'd be like, well, let me just make sure that this one like works, and then I'll get the next.
Yep.
One.
Now that'll pan into the next question here. And this is a question me and James and Devon, or Dr. Blunt, have a little like text stream that we just text. The 3 of us just text each other all the time, and we talk about anything and everything, stocks, life, anything else. And one thing that we mentioned, all 3 of us mentioned, was, so I'm big on always knowing the fundamental reason for the move, and knowing what the float is, what the market cap is, what institutional, going through the motions, all the checklists that everybody looks at, doing that stuff. But all 3 of us had said the same thing. And this is really what it came down to, was the biggest trades we had, we knew the least amount of information about the ticker. We simply just saw the chart and took advantage of the edge that we saw on the screen, rather than going and doing what you said. Well, let me just double check to make sure this is really, is it really that? is it really happening? Am I about to place a trade? Oh my God, am I going to do this? It's like your first time losing your virginity. You're like, oh, is this going to really happen? What? Oh my God, I can't believe it's going to happen. She picked me.
But that one I was not. Well, maybe next time we'll. Yeah.
Yeah, but that's what I'm saying is like when your biggest wins came along or your most consistent wins came along, were you going through your checklist every single time and reassuring yourself, or were you simply just getting into the groove, getting into the motions, and knew, hey, this is my setup and this is it? Was it more based on the pattern, or was it more based on fundamentals, or was it 50-50? Because to me, fundamentals always matter, but they don't always matter, if that makes any sense. You know what I mean?
Yeah. Yeah. I mean, they matter, but they matter sometimes.
That's what I'm saying. It's like, you're like, it matters.
They do matter. It just
sometimes it
depends on your time frame. But no, yeah. So the answer to the question is like, on my most consistent, on my biggest trades, did I just I did not. No, you're right. Like, I did not overanalyze the trade. I just like,
right.
Eventually you're going to hit this point where you're just so sick of overanalyzing that you just can't. Okay, so let me just tell you that the trade, like, my best trades come from the time when I just say, fuck it, I'm taking this trade. Fuck.
Yep.
Just,
yep.
No, it's the fuck it trades when you have that mentality, when you just, and not fuck it to risk. Like, you
right.
don't fuck
yep.
it. It's just, the mental, but what if that, but the options aren't even up until 450, and we didn't even get to there yet, but like, and so like, maybe we need to, like, it can still come, like, just fuck it, just
yep.
fucking, it's breaking down. Are you in it to win it or not? Like,
yep, exactly.
That's
yep.
that was definitely the best ones. And normally it's like, honestly, like, I also want to share this. It's not it's not the proudest moments, but like, sometimes when you're just like, you're in really big and it's really hard to give it the wiggle room you need when you're in really big. That's also when I just say, fuck it, I need to give it this wiggle room. Like, I'm either, like, in the beginning, like, I'm either going to lose $2,000 or not. Like,
yep.
Fuck it. Like,
yep.
So yeah, like, when it gets to,
yeah, for me, I mostly end up losing the money. My fucking trades, I always like, all right, I'm gonna risk $1,000 on this one. Fuck it. Oh well, shit, I'm down to 1,500 now. Well, all right, whatever. Okay, I made back $500. Man, I'm only down $1,000 today. That's not too bad. Let's see what we can do. Maybe I can get myself out of this hole. And then at 4 o'clock Eastern, I turn around and look at it. I'm like, great, down $2,000. Honey, we're not going to dinner tonight.
Yeah, we're not going to dinner tonight.
So the real point to the question was, do you find it better to check all the lists off, or do you find it better to pick the most important things and the rest of it is just a cherry on the top?
Yeah, so that's the way I do think about it. Like, I honestly don't, like, I think if you have too much, like, you notice, like, in my trade setup, even the ones that I shared like 3 webinars ago when I showed, like, the morning wash SSR one, the Furu short one, right, the overextended trend, my criteria is really small. Like, I don't want a whole lot of criteria, because you're either gonna, if you have too much criteria in the trade, what it means is you're too afraid to take the trade. Because you're trying, your psychological, your brain is really just trying to force yourself out of the trade, right? Yeah. So, like, I won't, like, if you have a hard rule, oh, well, I don't short stocks under 3 million shares, like, why not? Like, I mean, I understand some people, like, they won't short something under 3 million shares. Why not? Why not just go smaller, because there is more risk, right? Like, just. And maybe that's a bad one, because that's actually kind of a good rule, but like, maybe like, oh, if the institutional ownership's over 50%, I won't, I'm not trading it. Like
right.
Yes. Yep. If you're so specific, you're trying to trick yourself out. You're trying to have a total aversion to risk strategy, which has proven time and time again. You'll find in your, normally the people that do this are also the people who stop out before their risk because they don't want to lose any money, right?
Yep.
It's an inability to accept risk. And I think this is what I talked about in like my second webinar ever. The inability to take risk when you are focused on, when you're too focused on the criteria of the trade. You need to have like,
reminds me of a golf swing.
yeah.
He's talking about Charles Barkley's golf swing. He's like head down, and then he's like, I'm going to swing, and then hesitates, and then just like lifts it up. And then, have you ever watched Charles Barkley swing a golf club? Oh my God! Look at, there's like a compilation video.
Yes, actually I did. Yeah.
It's the funniest thing you've ever seen in your entire life. It's like,
yeah.
It's great. Anyway, so go ahead.
No, but yeah, like that's it. Like, so, if you have too much criteria and you focus too hard on every single bit, like you're not gonna ever take the trades. And so like you do need to like, yeah, like I basically care about the float, I care about the catalyst, I care about the volume. Like those are the three main ones to me. I care about the float, catalyst, and volume. And everything else is icing. Like if ownership is high, yeah, so I keep an eye for dips holding, right? Like
yep.
I keep an eye. I might be more conservative. I might definitely not. I might reduce my wiggle room. I might go smaller size, whatever. But yeah, keeping it simple is what it's all about, because the more criteria you have, the more when a trade goes wrong, you're gonna start looking like, well, which one was right and wrong, which one needs to stay in to the formula, right. Which one needs to stay out. There is no formula, right? There's no magic formula. Like, but you're gonna start trying to hyperanalyze things that like aren't really that important to the trade, and because you're trying to refine the process, but like you're so specific that there's too much stuff to refine. Like,
yep.
You're just gonna go nuts.
To me, the thing that always, so the one thing everybody talks about is like how Bao, when he analyzes a chart, it's based on either channels or lines or resistances or whatever it may be. But like, for example, this chart here, I'll post this. I'm going to post this in the chat if you want to put it up on the screen so everybody could see it here. And oh yeah, look at that. Look at that swing. Dude, I'm telling you, you got to go watch them when this is done. You got to watch it. It's the greatest thing in the world. It looks like he's about to like, you ever see those competitions where they have those like big, like hay knives or whatever the hell they are, and they look like they're the Grim Reaper, and they're just like mowing down a field of grass like super fast. It's like Nebraska Olympics or some shit. But that's what Charles Barkley looks like swinging a golf club. So this was something I was doing on the side, and this is what made me think of this and ask these questions, was a chart like this here. And this is something I did, and this is what I think people should do in order to have, a lot more faith in. So for me, what I did here is, this is a low-hanging fruit setup. So BIOC on the prior day was a runner. And yeah, so look, he does swing like that every time. The 220 was the previous close. 250 was the outer resistance. But you can see this level at 2. Like, when it opened up at 9:30, it was popping into that 2 level. And what you were talking about is people don't give themselves enough wiggle room in order to let the trade work. And what I'd always encourage people to do is go back and on average look to see how much these lines break above, and that becomes your average wiggle. That way that hey, this line can dance within 5 cents, within 10 cents, within 15 cents, whatever it may be. If there's whatever it may be, the most outer line, if it fails it usually gets within 5, 10, 15, 20, 30, whatever the cent number is. And that can give people a lot more faith in actually having a wiggle room for their trade to play out. Because I think a lot of people they'll watch the webinars, or they'll watch our videos, or they'll watch commentary, or they'll listen to Bao or whatever it is, and it's just like a fire hydrant of information just like right in their fucking mouths, just like just overload, just like, and they don't know what to do. And they just sit there, and it's like paralysis by analysis now. Like you're just like, all right, I'm going to short this line, cover this line, long this line, sell that line. And it's just like, I don't know where to start. And with the keep it simple rule, you know, people will read chat and they'll be like, well, how do I keep it simple when there's like 52 things coming at me all at once? And so that's why, like you mentioned, it's important to just find that one setup or that two setups that work, and then have a very brief checklist for them and know how much slippage you need to let it work. Always look at your risk reward, and then let the trade play out and take the trade.
Yeah, and it's really interesting, like what you were saying, because like normally what you say is you don't want to data mine, right? Obviously, as a statistician, data mining is like, it's literally the good thing that's going to F up your data the most and the easiest. So you don't want to data mine, but in this situation, you almost do want to data mine because you want to see the setups that worked that went above or below, right? You almost want to see the ones that went below the line too, so you know how early you have to start. You only want to see, it's almost easy. You can literally just, whenever you have a FOMO, like, oh, I missed out on that one, save it, right? And say, that one did work. How much over, it's almost like allowing you to data mine in this one specific instance, to where pick all the ones that work and look at how much it went over before it worked. Or
exactly.
So it's actually, this is the easiest thing probably to ever track, because you don't have to worry about not data mining, because you have to data mine.
Yeah, and really, this to me, is it's like data mining, but on this side is it's also practicing your art form, because you're able to identify clearly now with hindsight. And whether people say that they're like, don't use hindsight, but bro, hindsight is one of the most valuable tools for a new trader to be able to go back, watch how the trade played out, and you don't necessarily have to pretend you traded it, but you can now analyze with hindsight, how much did the line break above? Where did it stop before the line? How much below that? And if people will notice, Bao always places his orders with certain cents ending on the number. And he'll say it's because he's superstitious and he's Asian, but that's not it. He knows statistically how much these lines break because he's watched them do it for 20 years. He knows how much wiggle he needs to give this price range of stock in order to work above or below the line. He puts size here, he lowers his size here. And yeah, fudge factor, like Paul said. But people going back in hindsight like this and look at, I have an Evernote like journal on the computer. And what I do is I literally go back, I screenshot these charts, and I like circle the line, and like I look and I see, okay, this high broke by 5 cents. Because, you know, I'm short biased. So most of what I'm going to do is look how much something broke above. But even on a long bias stuff, I have long bias charts where I'm like, okay, it broke below the line by like 3 cents. So how much should my fudge factor be on that? Because like on longs, I have no fudge factor at all. Like I'm in and I'm out. And I'm like, I got none. I'm like, oh shit, it's a breakdown. Get out. I'm out. It's failing. It's failing. It's breaking. It's gone. Yeah. And I'm like, I'm down. Like, yeah, me and Brian talk about this all the time. I'll be down 4 cents on a long, and I'm like, nope, bail. I'm down $2 on a short, and I'm like, it's coming back. Watch it.
Coming back, yeah. I mean, sometimes I feel like Bao's fudge factor on like a $2 stock is willing to go to 8.
Well, when you got a $2 million account, it doesn't really fucking matter. He's like, one day he had this ticker, I don't remember what it was, but he was like, whoops, fat fingered it, and he just scaled a $2 move, and I was like, Jesus Christ. Yeah. And I would have died. Like, I literally would have just like froze. Like, it would have, I would have just been like, the whoops. Yeah, it was, oh yeah, no. But that's what I mean is, never ask Bao what his risk is. unless he's scalping midday. When he's scalping midday or late day, it's always like 5 cents or 2 cents or 3 cents. It's like super tight. But in the morning, don't ask him what his risk is because he didn't have one.
Oh, I know some traders and I don't recommend this for the new trader where they don't stop out before 10:30.
Exactly. Yep.
They will not stop before 10:30. And that's, so anything like moves that just keep going, well, they just keep shorting until it's 10:30, and if they're not green by 10:30, they cut the position.
Yep.
Like that's some cojones, bro.
Oh yes. Oh yeah. And they're just scaling it the whole time, and what they're focused on is not what prices it's at. It's how much they're down. It's how much more can it potentially squeeze that they're looking at it and they're looking to watch. And it's just like, man, that's got to be painful. Woo!
Yeah, it's like a numb pain though by then. Like, and that's just something that I've never like really like I can't embrace.
Yeah.
I would like the thing is like that kind of strategy, and I might like actually implore it in a swing account one of these days, but like just do 100 shares and literally try it. And if I can do it on 100 shares, then maybe I can do it on 200 shares. Then I can do it on 300 shares, and then 4, 5, 6, 7, right?
Yeah. Yep.
Yeah, and add every 50 cents or range dependent, and just literally only stop out at like 10:30, 11. Like, I might try it in a swing account one day. It's something I've always wanted to do, but I've just been so busy like learning other stuff. Yep.
So the last question I have, and then I'll jump off here and let it get to Q&A. What was when members get this fire hydrant of information, what are some of the most important things that we teach that you think people should have on their checklist, and these are the things that they check for every time above all else?
I guess, okay, that's a good question.
Besides what you just mentioned, which was volume.
Yeah, float volume catalyst is the top, my top 3 checklist. I guess it depends on how new. A super new trader.
Very new. Let's assume very new.
First day trader, they need to know about liquidity.
Yep.
They need to know, like, I mean, they're probably not trading very big, but they don't want to get into an illiquid stock that has a 50-cent spread. So always check.
Volume is like a 2-part criteria.
Right. Yeah, they are.
Like how much volume is there, and then how liquid is it?
Right. Yeah, and that's different. That's an important distinction that not a lot of people make. By the way, I'll continue. I'll answer the question after I make this distinction. If GE is not trading, if GE has 0 trades on the day, it's still very, 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 very liquid. But it just has no volume. Whereas, like, if something like SAEX, I guess the opposite, SAEX can have 50 million shares traded and still be illiquid as shit.
Yeah. Yep.
So just good, important distinction. But yeah, float volume catalyst is really my checklist. The new trader also has to know what do they have to know, or for a checklist?
What do you think they should know? What are 3 things that would keep them out of trouble?
Okay. Yeah. I would honestly just plug my rule. You're never allowed to get into a sized position until the position is working for you. That's what I've plugged. You need to have a golden rule for that. You need to know that anything can happen, right? There is no it's definitely done. There is no it's definitely going to bounce, right? There is no definitely. That's like number 2. And number 3 is probably if you're not trading, you're not doing a bad job, I guess.
Gotcha.
Yeah, that's probably besides like
if you're new, I get exactly where you're going with that. If you're new and you're finding a trade every day, you are trading way too much.
Yeah, especially if you're brand new. If you're finding a trade every day, like you're like something's wrong.
Yep. No matter, in my opinion, no matter if you're winning or losing, if you're finding a trade I just short everything, Brian. That's what I do. And it seems to work out most of the time. But when it doesn't, boy, does it not work out. Um,
Longs have bigger explosive moves.
Yep, exactly. And so that's what, because as time goes on, this chat is going to be filled with more newer folks, just based on what we preach and what we teach. And so for those newer people, it should be, number one, if you're finding a trade every day,
yeah,
you're trading way too much.
Yep.
Because the patterns that we talk about, they don't happen every day. They may be, I mean, that's why I mentioned number of occurrences. Know how often this pattern really happens. And if you're finding it way more than what the average is, you either have to ask yourself two questions. Is the market super hot, or am I over trading? And if the market is not super hot, stop before the one trade does you in and you lose all the gains that you just previously made.
Yeah.
That was it.
Yeah, and yeah, like for me, the there is no definitely, like for the newest. I guess it does depend. Like a 6-month trader or a 1-day trader. The 1-day trader needs to know there's no definite, because the second, like, you can be really filled with an emotion once you figure out a setup, and you can be the opposite of me. Like, you don't have to necessarily be like me, right? Like, I was a little bitch. You can be so gung ho that like, oh, well, this is the setup. This is like, I mean, why am I only going to long it 1,000 shares? I'll make more if I long 10,000 shares. It's like, it's a definite. Yep. It's the setup, right? No definite. Or, oh, man. Well, it's definitely got to bounce. They always bounce. Like,
yep.
No, like.
Yep.
Yeah.
And one more thing I mentioned with James and Devon that we talked about was we were talking about basically the question I asked you, which was, and you said you were a little bitch about it, and I think many people have the answers that can answer the same as you did. But the reality is the people, to me, the difference is you can take two traders that know the same information about a market, and you can put one trader in an entirely different personal life outside of trading than the other trader. And the person with the less obligations and the less stress and the less responsibility will generally be the person, on average, that bets more and is willing to risk more and will eventually make more. Because the person that has all of these overhead obligations trying to start trading, like let's say somebody is, 35, they got a wife and 2 kids, and they come in to trading thinking that it's going to change their lives. But they can't seem to find consistency because...
Oh, it's rent money.
Do what?
It's rent money.
Exactly. Or all of the bills are paid, right? All the bills are paid. But if you lose your account, you might be divorced the next morning. You might get served. And I'm not talking about in basketball. Whatever it may be. But the point is, the people, to me, for the people that don't have obligations and aren't putting in the work, I don't know what the hell they're doing. Because I would literally, like I've said to my wife like several times, I always say it as a joke, and I always tell her, I'm like, if we didn't have 2 kids, we'd be millionaires by now. I just want you to know that. And it's not that I don't love my children or anything, but it's obligations that I have to think about every time I place a trade. Every time I put money on the table. And people say scared money doesn't make money. That's true. But
doesn't lose it.
Damn sure doesn't fucking lose it at all. and the point is that you always have to have a certain level of fear. If you don't have a certain level of fear, then you could lose it all. And if you don't have the means to recoup those losses, or you don't have the mentality to, you're going to be done. You're going to be done. And one quote from Thomas Edison is, the people that fail the most, or the people that, and I'm going to butcher it terribly, the people that fail, or the people that give up from failure, never knew how close they were to success. But basically what that means is you have to stay in the game. You have to be able to fail. And when you're on your last leg, or when you're taking that last breath, you got to continue to think, I could be one step away from success. But that's very damaging. You know, you could just be a total idiot, and you could be losing all your money, and you actually just need to look in the mirror and tell yourself you suck.
Good idea, guys. Don't cover the top. It's just about to turn around.
Exactly. But I'm not talking about chart analysis. What I'm talking about is,
it's just like, if you cover, it's just.
Yeah, exactly. Yeah.
It's a great quote.
And the point is that there you go. Many of life's failures are people who did not realize how close to success when they gave up. That's it. Yeah. And the point is that you may feel over time, as new traders come into this, it's either overwhelming, or they don't know what to do, or they just continue to lose. They don't have that winner's luck or first timer's luck, whatever it may be. But you always have to know that maybe there's a turn around the corner, and you always have to continue to push into this.
Yeah, this is a good question. How do you know if you're close to success, or you just suck and trading isn't for you? If you think you just suck and trading isn't for you, then trading isn't for you.
Exactly.
It's mindset. Like,
to me, it's true. If you wake up, for me, when I wake up in the morning, all I think about is stocks. Like, and literally, if I think for 1 second, and I have this time, like right now in this market, I'm like, fuck it, I'm done. I'm done doing this shit. It's driving me nuts. I hate this market. But when I'm like, okay, what else would I do? And this is just going off on a tangent, but I'm like, okay, what else would I do with my life? And I'm like, I literally don't love anything as much as I love the markets.
Yeah.
But if you are somebody that is forcing the markets to try to make it work for you, that's how you know you suck and you need to stop.
Right. And the thing is like,
or if that number reaches 6 figures, losing, that's when you need to go, I've lost a fucking house. I'm gonna be done. I'm gonna walk away. I'm gonna go sit in the corner.
The thing is like I've been beaten down hard. I know every other trader's been beaten down hard, and you suck and trading isn't for you if you're not willing to get back up again. Like, I have gotten beaten down hard. I've lost, and like I've had like red streak after red streak, and I've never, like, sure, I've had like the immediate thought question, fuck man, like, can I do this?
Yep.
And never did I not wake up the next day.
Eric Wood said it to me when I took a loss on Intelsat. I was talking to Elkwood in IU at the time, and I was short Intelsat the same time he was, and I got my ass handed to me. Literally lost $20,000 that day. Like, couldn't even, and it was my daughter's 2nd birthday, so that birthday was real fucking fun because I had to go jump on a trampoline in a trampoline park, and I was like the only person not smiling in a trampoline park. Like, I was the only person just pissed on a trampoline. But what did I do? I took a couple days off, and I walked back to the screens, and I said, that never happened. But what Eric Wood told me is he goes, suck it up. There's more where that came from. And I was like, thanks, Dad. Fuck. And I was like, dude, you gotta be kidding me. What? And I was like, this is the funniest shit I think I've ever heard. But when I took that loss, it hurt. You know what I mean? Like, it was that head in your hands moment, like you were talking about, where you just like, your head's just down. Yeah. And you're like, can I do this? can I freaking do this? And yeah, like that. Yeah, when you're losing and you don't do a damn thing about it, you just keep doing it.
Yeah, and the thing is like you're gonna lose at a lot of stuff in life, and you're gonna lose and lose and lose, and you're eventually gonna drop it, right?
Yep.
You're eventually gonna drop it, and you know why? Because that thing wasn't for you.
Yep.
Right, but if you do like, so if you know if that thoughts, and you'll know, like you'll know if you lose and lose and lose at trading, and you know, and you don't have any intention of ever not sticking with it, then you kind of know it's for you. It's just like you still have to figure it out.
Yep.
If you have confidence in yourself that you're going to figure it out, you're going to figure it out. But it's not going to be for you if you have thoughts of dropping it. Like it's really like it's all or nothing. It's a mindset.
Yep. My first thought after that big loss was, how do I get back up?
Yes.
It wasn't, what can I do next? That was it for me. I'm done. My immediate thought was, ow, that fucking hurt, but what am I going to do to fix it? Yeah. And I mean, I can't explain to you the pain or the emotion, and I hope nobody ever has that experience, but you probably will. Just be real with that. Be realistic with yourself, and know that you're going to take a loss that cripples you, that you cut or you break every single rule that you have or have been taught, and you will go against everything, and you will get your ass handed to you. Or the even worse part is you will literally check off every box, and you will still get your head kicked in.
Some people need
That's
it twice.
Just markets, man. Huh?
Some people need the lesson twice or 3 times.
Oh, dude. Yep. Exactly. Yeah. Every time. I mean, when I was learning, I blew up 3 accounts, and they were small, like $5,000 each. But it was every time I was like, all right, what am I going to do next? What's the next strategy? Well, that didn't work. What was I doing wrong? It was, how do I fix the next one? And that was it. What did you do different? What did you do that was different during each blow up? Well, what I tried not to do what I did in the last one. I was like, just to all that shit that I did to lose all that money. Yeah, I did the total opposite. You know what I mean?
I know what you mean, bud.
It was like I lost a lot of money going long. So I said, man, I can buy a top like nobody's business. So I should be able to just switch these buttons around and short like a king. And that was pretty much it. Colton, no shit, sure. Yeah, I just did that. I did what I didn't, I did the opposite of what I did in the prior one.
Yeah.
No, really what it came down to, each time I got to that factor where I didn't care what I lost, I started looking at the account, and I every day I walked in and I looked at my balance, and it became just like a part of me. Like, when you look at your checking account and you're like, oh, it's kind of low. Maybe some of you don't, but I do. And, and you look at it and you figure out, was it the setup that you were playing that was failing, or was it you emotionally as a trader that was failing? Were you not letting the trade play out? And what I did was I went back and I said, okay, I just kept taking little losses and little losses and little losses and little losses. And then finally I got tired of losing, and I just went bigger. Just out of nowhere, I would go bigger. And I'd be like, all right, I'm going to risk $500 on this setup and then lose 1,000. And I'm like, oh my God. And it was bad. It was bad risk management.
Yeah. And that's like, when I discovered the, yeah.
Ross, slow clap.
When I discovered the what I call the risk management hat, versus the gain-seeking hat. I mean, it just changed.
Yeah.
Like that was the light in the tunnel for me. It's like when you realize that, like, like you're here to manage your risk, and you're like a win day is if you don't fucking lose big. Like it's because any small loss, like small loss can be recovered. It's the big losses. So what I recommend that everybody do is go back into your trades, all of your trades, your P&Ls, count the 10 biggest losses you have, or the 5 biggest losses. How much of that is your account? How many times, how many of your losses can be summed up in 5 trades? Like how much deficit of your account, or where it would be, right? Can you sum in 5 trades or 10 trades, like the top 5, top 7, top 10?
Yep.
And then you realize that, holy crap, the $200 losses, I can make that up. The anything sub 500, cake, and easily overcome. Get easy to come back. That's just 1-2 good trades, 5, 6 of those 1-2 good trades, you can make that back, right? Or at least that's my size relation when I was figuring that out, right? It's the big losses you have to stay away from. If you can avoid big losses, you can make it, right? It's the big losses that are literally gonna just kill you. And it sounds like no shit, Sherlock, but
that's really the honest truth. There's no secret sauce. Me and you joke about this all the time with questions that we get. People will word the question slightly different than another person to try to see if we have this secret answer that we're holding back on. We're like, no, the truth in the recipe is cream cheese, and fuck you, I'm not telling you. But that's not what's happening here. It's literally discretionary trading many times is the person that fails. It, like Danny says, it's most of the time it's not the system, it's you. It's like talking to your ex-girlfriend. It's not me, it's you. But you have to look at the market and go, it's not you, it's me. It's definitely me. And like Tom is saying, what people do, or what I did, sorry, not what people do, what I did when I kept taking those losses is what I would do is I would walk in and I would go, okay, I'm going to risk $150 on this trade. That was just too much for me at that time. This was 4 years ago. And I would go, okay, I'm going to risk $150. And I'd be in one swing, and I'd be like, boom, in 150. And the reason why I risked 150 was because I would want 1,500 shares, and I only wanted it to go against me 10 cents. And I just didn't give the trade enough time to work out, and I would stop out, and then it would go right in my favor, and I'd be like, damn, could have made 500. And then so on the next one, I'd go a little bit bigger and a little bit bigger and a little bit bigger. And I would try to make back the prior loss every single time. And if you continuously lose, it's you. It's definitely you.
Yeah.
Go back to the cream cheese comment.
That's so funny.
Whoever gets that game
the answer is cream cheese. Fuck you, I'm not telling you. It's so funny because cream cheese is my favorite ingredient ever.
Right?
Yeah. So, Oleg, the answer to your question, you ever get that gain protecting mentality that makes you avoid taking good trades sometimes? This is what Blake just said. That's in a webinar or two ago. You should check it out. I talked about the prior trade hangover. This is an example of a prior trade hangover. And a prior trade hangover basically means that you're letting a prior trade affect your decision on this trade. And that decision can be even taking the trade. Oh, I'm red, so I want to go double on this trade. Or, oh, I'm green, I'm not even going to take this trade. They're both, they're both sins of a different coin. They're both they're both sins. And this is a better sin to have, gain protecting mentality, but still, that means that you're not capitalizing on a trade you should be. So it's still a loss if you want to think of it that way.
Yeah.
But that's more of a mentality you want to have only when your mind is stable. Like new traders, like they want the gains because new traders are kind of always in rehab mode, right? Rehab mode is when you're trying to get your confidence back. It means that you're not in a state of confidence, right? So like what I talked about today, trader toxicity. It's not something you want to do is just cut the day when you're green. But when you're in rehab mode, you're trying to get your confidence back. When you're a new trader and don't have confidence, you're trying to gain confidence. So you're pretty much in the same boat. So new traders might want to do that, right? To protect the gains, right? Lock in the green days, lock in the confidence, prove to yourself you can make money, right? But once you have a stable mindset, it's kind of something you want to veer away from.
Yes. Yep. For me, when I get into that mentality, the only reason I get into it is because I had several trade plans that morning that, let's say I made 3 plans and I traded 2 of the 3s. And then all of a sudden, a 4th shiny new object comes into the picture, just like that doe stepping out onto the field in the dewy mist morning. And you're like, oh, baby.
Oh,
baby. But you're looking at your P&L and you're going, I've made 2 good trades today. I'm green on the day. But this 4th shiny object is really making me want to touch it. Yes, exactly. Yeah. And it's like, I want to touch it. I want to touch. And to me, if you've already made 2 good trades based on the plans that you already made, I would tell you to just watch that 4th one. Just watch it. Because if it was not part of your initial plan to trade that stock, and then all of a sudden it came into the picture and it's going to make you panic about these other 2 trades, you made 2 trades. Yeah, don't touch the boat. And
that's the boat.
You made 2 trades that were great trades. And you're up $50 today. Who cares? Move on. You made 2 great trades and you made $50. You just did what 90% or greater traders can't do in a day. You did what the majority cannot do. Take the win and walk away, or take the win, cut off your buying power, or lock your montage. Or if you don't have that ability because you're trading with somebody like E-Trade or something, then call them and have them cut off your buying power. Or log out of the platform and go watch it in something you can't trade on. Because when you have to log back in, by the time you log in, you miss the trade opportunity. So that's kind of what if it's a legitimate opportunity? It's not a legitimate opportunity if you never plan to trade it in the beginning.
Right.
It's not legitimate.
The easy answer is if you have to ask, it's not.
Exactly. Yep.
If you have to think about trading it, it's not.
Yep.
You'll know.
To me, like this morning, I was like, I got nothing I want to trade. After AVEO just like totally went, I was like, yeah, I got nothing. But then all of a sudden, IZEA pops up, and I'm like, ooh, this is looking kind of sexy off of 65. Daddy might take a piece. And then I sat back and I was like, but did I go into today thinking I was going to trade IZEA? Nope. Okay. Nope. Not touching it.
Yeah.
It turned out to be a 20% win. That's fine. But I never planned on trading IZEA. And so there, to me, I protected my morning by avoiding the shiny object that came along.
Faro, I'm going to guess. Faro? How many years did it take you guys to be profitable? Literally, I think this one comes in every weekend mentoring. But yeah, like 2 years, I think. Yeah, but like on my third year was a good one.
Yep.
I think Joe's the same.
Yep.
What works for me is having 2 P&L charts with trades you took with best case scenario, and yeah, that's a good way. It's a good way to do it.
Yep.
That's not relevant as some of us were in it without.
Could you write down your process, screenshot the trade, and then post it in chart recaps? Oh, yeah, that's a good way of saying, yeah, is it a legitimate opportunity? Yeah.
Right, yeah.
If you wouldn't be afraid to post a loss on it, then it's not.
This is what kind of gets – I just listened to this little podcast, and I'm going to get on a soapbox for 30 seconds, and I'm stepping down.
Okay.
I listened to this podcast that was like, I just made 30R or 40R, 60R or something like, basically they were saying what they risked versus what they made. They just generated 40R in a month. And to me, when you're a discretionary trader, that is like the biggest crock of shit, because how many times do you trade, or like you're discretionary, you can move your risk down and make it in favor of your R. Like you can do that. Like you literally, it's not an algo that you can't interfere with. You can literally go, yeah, I was shorting the $2 line on DMPI. You know,
I was risking 199.
Yeah, I know. And you're like, I had 0.1 R. Please don't even. I was like 40 R. Tell me how much you made. Like, did you make $4,000 this month? Which is fine. That's great. I don't care. That's money. That's better than, again, the majority of traders. But don't think about it in terms of, like, this is my response to the could you be proud of it. Don't take a trade and then go post it in chart recaps and word it in a way that makes you sound
perfect.
Cool.
Perfect.
Yeah.
Like,
I nailed it.
Like you shorted and like the stock went and it's like, oh, well, my risk was like 217, but it topped out at 216 because my stop is perfect.
Yeah, I was too slow. I didn't actually stop out. Fortunately, it just went right back in my favor. And so technically I had no R, zero risk whatsoever. Or, you know, when people will ask, they'll be like, so were you risking the 50 level? I'm like, I mean, maybe, yeah. And I'm just like, I guess I'm just going to sound smart for saying that, because some of the trades that I make, I don't really have a risk in the beginning because it's just
they evolve. Me too.
And I'm like, okay, there we go. And they're going, well, what was your risk on your first entry?
Yeah, I mean, it's a first
pretty wide.
Yeah, so there's like an ultimate risk eventually, like you know.
Exactly.
Yeah.
Yep.
But it's called. I went over this in another webinar too, and that's gonna be my nickname pretty soon. Is evolved stops. It's like sometimes.
Right.
Yeah, it's like you get in because you it's a parabolic and you're thinking, but like it like majorly stuffs, and okay, now my risk is the top of that. Like, okay.
Yeah, and it's that was the thing that got me. Was it was like if somebody came on and they were like, I made 40R, and they were like, I trade algos, like, and they can't. I'm a quant trader. I can't interfere with my stop, and I proved that I made 40R in a month based on my risk. Well, but I could literally change my stop in the middle of the trade and say I made 40R.
Yeah.
Like,
however, I mean, there is an R system that you can use, and an R system that you can use is if for blanket trades, if you like on all of your trades, if you risk $100, then you know if you make $400 at the end of the month, you made 4R.
Right.
So that's the only way, like the R system, this measurement tool actually works. But the difference is you don't just have like all of your trades, you have 100 risks. Some trades you have 100 risks, some trades you have 500 risks, some trades you have, you know, $1,000. You know, it's like it. So then you kind of have to, if you truly want to know what your average risk is, then you have to do a weighted average of how many A setups you took, how many B setups you took, how many C setups you took to find out your weighted average R, to find out your weighted average return.
Exactly.
40 R to, you know, 40, your weighted average return to R.
Yep.
So if you want to do it like that, it's a lot of work, but like, yeah, but because we do treat different trades with different risk and different size, that's the only way to have an R system.
Yep. I have a personal rule that if I set a stop, I can't change that stop middle of the trade until I realize a piece of profit. I can't move my stop.
Right. Same.
That's just me. And the reason why it does that is because me personally, I know my personality and I want my risk to be as low as possible. And so I will change my stop. I used to change my stop middle of the trade and I'd be like, nope, that's a lower high. I'm going to risk it off that line.
That's a aversion to risk.
Yeah, exactly. and it would like bounce just a little bit above it, and then I would be like, I gotta get out, and then it goes right in my favor, and I'm like, and so I learned that when I moved my stop, I always got stopped out like 80% of the time, and I should have stuck with my initial stop, and that was how I fixed. That was one of the things I changed about one of my account blowups. That was one of the things that I did different.
Well, thanks for coming on, Joe. And
yeah, I appreciate it, man.
Yeah, man, it's always fun. Like this is a lot more fun. So I guess that's pretty much it. I think it's been a 2-hour webinar. It's probably like it's okay over here. It's 3 o'clock, but it's 9 p.m. for everyone else. Last minute questions and otherwise I'm gonna close it out and say have a great night, everybody. Thanks, Colton and Joe. I mark up many large cap charts for important levels. I don't have a specific plan, but I trade price action off those levels as I see during the day. Are others not doing that? Well, I do. But are you saying, do I actually draw them on the chart? I don't. But every now and then I will if it's like super important level, sure. Or like if a group of levels, I might put it there. Thanks, everybody. Thanks, Oleg, 2 times, Tom, Dal, Brittany, Blake, Royale, Matt, Paul, T. Nate, Tony, Cody, Joe, Jay, Danny. Hey, we work hard. Thanks, everybody. And thanks, bro. I'm hoping I get that right. And we're going to stop the record.